Today I am so excited to show you some of the best TradingView indicators that will help you make a lot of money in the next few years. A lot of people are getting rich using these TradingView indicators and this simple scalping trading strategy I'll show you in this video. Like this particular trade right here, it got a 5.81% return in 1 hour, 45 minutes. See this 1 to 5.81 risk to reward ratio for this entry and exit. Alright, so, yeah, risk $100 to make $581. Yes. Please make sure you watch this whole video till the end, because somewhere in this video, I'll show you also how to set up alerts to get the biggest wins with this scalping trading strategy. So you get alerted with the good trade opportunities that come up, and you don't have to watch the charts all day long. Again, nothing in this video is financial advice. It's all for informational purposes only. Let's get into this. I'm going to show you guys how to set up the charts, exactly what settings to change and all of this stuff, and where to put your stop, loss, take, profits, all of those things. So let's get into it. Alright, so this is what your chart is going to look like when you first log into TradingView. And you can use both of these free indicators on TradingView with a free trade rating view account, too. Here's what your chart is going to look like. We're going to add 2 indicators. And again, I'm using this to show you guys examples. I'm using GBP USD as a Forex combo, but you can use this on crypto Forex stocks options. So let's make some changes to that. We're going to come here, go into settings. I'm going to make this a little bit thicker. First, it's easier to see, go into inputs. And for length, you're going to use 5. We're going to use the 5-period EMA, the exponential moving average. The second indicator that we're going to use that's free. So click here on an indicator again is just the stochastic, simple old stochastic. Okay? And we're going to make some changes over here as well. So let's go into the settings for the stochastic right here. For the smoothing instead of 1, we're going to make this 3 so it gets a little smoother. And for style, what we're going to do over here is you see how this channel, whenever you add the stochastic on here, the channel is between 20 to 80. For this, what we're going to do is we're going to change it from 20 to 25 and we're going to change 80 to 75. So our channel is going to be just a little bit narrower for the strategy. Okay? So 25-75. And then over here, smoothing 3. Click. Okay, your chart's set up. Now, what are the rules for this particular strategy? So what you're wanting to do is we're going to treat the 5-period EMA kind of like a magnet, alright? So think about it as a magnet where the price goes away from it, it gets attracted back towards it and it just follows along and it goes back and attracts the price action towards the EMA. So a little bit, so that makes it a little bit easier to understand is use the EMA kind of as a magnet. So what the first step you want is, for instance, for long trades, right? So we're going to go over the long trade strategy first and then I'll show you guys a short trade strategy. So on a long, you want the price action to be below the 5-period EMA. So it's kind of away from it, right? And then what you're looking for is a positive crossover in the stochastic, okay? So away right over here. And then you see a positive crossover when the blue crosses above the orange. That's a positive crossover for a long position, okay? And you want the stochastic to be within the range of that 25 to 75. You don't want it to be outside, right? Like over here, you had a positive crossover right here, but you see how it just came back down and stuff. So you want the channel, the stochastic to be inside that channel. And then, for instance, you take a long position right here when there's a crossover that's happened, right? You get in and you wait until the price action for the crop and the crossover gets above the high of the previous candle. So you'd get in right there. Your stop loss would be the recent swing low, and then you would ride the price action into profit until there's another crossover. Like, for instance, there's one right here, but it didn't really cross over. It crossed over right here where the blue crossed below the orange. You're getting in when the blue crosses above the orange and getting out when the blue crosses below the orange. Okay? So for instance, right here is where the crossover happens. So, for instance, that trade would have been almost a 3.5 to 1 risk-reward ratio, right? Risking $100 to win $332, that's pretty awesome. Simple rules, but you have to be super disciplined for some of this stuff, right? Like, for instance, let's see. Yeah, over here there's a crossover. Price action is below the 5 EMA. So you'd be like, okay, when there's a crossover, you get in. But when it crosses over right here, the stochastic is still outside of this range, so you're not going to get in. And then you see what happens, right, if we look over here, right? This doesn't qualify because the price is still touching the 5 EMA. You want the candle to completely, not a single piece of the candle needs to be touching the 5 EMA because it will be close. Okay? So there's a long example. Now let's go over how to use the strategy to short the market to make a profit. But before we get into that, please take a moment and hit that like button and type boom in the comments below. If you guys are enjoying this video, it really helps out the channel and I like to read all the booms in the comments. Alright, now let's take a look at a short trade example. Alright, so here's a great short example, right? And this is from the beginning of this video, right, that we saw that 5.81% return thing, the 5.81 to 1 risk to reward ratio. So the strategy for the short trades is the exact opposite of the long. You want the price action to be above and the candle not touching the 5 EMA, right? And then you want there to be a crossover that happens, which happens right here. So the crossover is going to be opposite to right? To get in, the blue needs to cross below the orange, and to get out, the blue needs to cross above the orange line in the stochastic. So when that happens and the stochastic is in the channel, right? 75 to 25, the crossover happens in the channel. Get in and then get out, right, of this trade. So you enjoy that swing all the way down. I'll show you guys another example, too. So let's look at another example. So here's another example of a short trade. So you've got the 5 EMA. Everything is like very close in touching and all of this stuff, this one doesn't touch. But this wouldn't qualify anyway because the price action is below. This isn't working out. You've got price. That's above the line, above the 5 EMA. Another one. Crossover happens right here. So you'd get into this trade below the last candle because you'd see the crossover happening right here. This is the last candle you'd get in after it makes a new low, right? So let's do this short position that you got in right there. Your stop loss would be the recent swing high. And then you'd wait until the crossover again to be able to get out. So you'd get out all the way over here at that candle. And again, that's right there. Almost a 2 to 1 risk to reward ratio, right? Almost a 200% return. It's 191% return. So you see how powerful this thing can be. The main key is to be patient, right? And again, to be patient, you need to find the right spots. And you can be looking at charts all day, depending on how many currency pairs you guys trade or what crypto you guys are trading, how many stocks you're trading, all of this stuff, right? Because you can use the strategy on basically everything. But now to set up the alerts. I'll show you guys how to set up the alerts. But before we get into that, just take a moment, hit that like button if you haven't already. It really helps out the channel and also subscribe. Subscribe to the channel and hit the bell so you don't miss out on more winning trading strategies that are going to help you become a more profitable trader. I put out these videos weekly, so make sure you subscribe and hit that bell. So now how do we set up alerts? We're not going to set up the alert with the EMA. We're going to set up the alert with the stochastic. That's where the biggest opportunities are, is when things go outside and come back in. When things go outside the channel and come back in the channel, okay? That's where the bigger wins. Are you going to find opportunities where things happen, like within, but usually when there's a bigger trade, it's going to be coming from out of the channel, going into the channel and continuing. So for that, we're going to go into the stochastic indicator right here. Click on the three dots, click on Add Alert on Stochastic. And here's how we're going to set this up in conditions. Instead of crossing do entering channel, okay? When we do entering channel, we're going to change the upper bound and lower bound. No, the channel will not be at 30.35. I don't know why it set at that. The channel, the upper bound will be 75. Okay? And you see that, right? And the lower bound will be 25. Cool. So now you see how it made this a channel, right? Those lines went away. And it put the dotted lines around the channel. So that's going to be you're going to get alerted here and from trigger once per bar close. So whenever a bar closes where the stochastic enters the channel, you're going to get an alert from TradingView for free. It's pretty awesome, right? Okay, click create and you've got your alert set up. Simple as that. And these indicators that I used in this video are completely free to use. Hope you guys enjoyed this video. Click like, comment below. Hit that subscribe button. And now check out this next video where I show you another